Hello traders, this is Alex with the StockMatrix program. I'm going to do an update, or kind of the weekend update. Haven't had a bunch of trades, but here is again my X account, which I update all the trades on, CBOT Man 33, and you can review that. And I'll post what we're putting on today on there after I'm done. So what we go through here will be on there as well. Let's go to the portfolio. I did have an issue on bar chart with Amazon. For some reason they only go out to August, and all the trades that we took off didn't have any value. Now, good and bad, right? Some were losers, but I had to go in and actually put a dollar amount in there. So anyway, if I don't catch it, it might screw up the balance a little bit. But anyway, we're at about 333,000. I believe the high was around 58,000 or something like that. Now, again, since we've rolled some of these out, our closed positions are a plus 15 grand, right? So they can't take that away. That's the advantage of the options. Once you pocket that, they can't take it away. So now we've left a lot on the table, and I did roll down another one when I was doing this here. Since Amazon screwed up, I just went ahead and rolled it out. The only one they had trading is August. So anyway, I did the August, which is fine. That's 120 days out or whatever. So I rolled it down and out in time. And if I'm going to mess around, I'm going to make sure I get extra time. Now we did spin a little bit on a few. The ones that we were long, we are now short on. And let me explain. Let's go to the actual trade sheet. We are officially, again, because I'm doing this video because this is the end of the moon period, right? We're into the new moon, or full moon, excuse me. So this full moon is usually pretty active anyway, right? It's the first full moon past the lunar eclipse too, which is kind of important to me. But we are down every stock. On the short term, we are only up one, which is Microsoft. Now we're not at the lowest level, 391. Now, I didn't update this. I was busy doing some other stuff. I was out of town and whatnot, but you can see that we got a low of 369 back on the 5th, and I imagine we might have been a little lower than that at some point. And this one was a mistake. I didn't have it updated right. But anyway, you can see that definitely, concerning that. Now my instincts tell me when everything's short, that's a low. Right now, again, the system don't care about any of that. They don't system don't care. Any algorithm don't care about your opinion or your gut. But to me, it makes me a little concerned that it's probably a low. And if it is, I guess we'll give back a lot of the money. Now, again, all these charts the stops got moved over all in time. I don't think any of them got moved down, right, to protect more. So you can see we're stopped here. We're going to make a little bit if we get stopped out on in a video. You can see this is a big outside period, but it did not change the trend up because it has to have two boxes above the previous zone, right, to turn it up. So it closed right at the solar eclipse. So again, I'm not confident to sit there and tell you, oh, the low's in. Now we did have a bear trap. So I like that, of course, me and the traps. I love the traps. So now again, doesn't mean that now we're 360 degrees over from the previous low on NVIDIA, right? So 1 year basically, right? From moon period to moon period, it was on April 23rd, 2024, the full moon, and we are on the full moon April 13th. So again, 360 degrees over. Or, if you want to count it out in quarter moon periods, again, I'm getting a little more technical here, but that's 49 quarter moon periods. So just to be relevant. Anyway, so again, that's kind of important to me. And again, if you listen to all the videos, and again, I recommend going back, taking some time. Again, I'm trying to educate you by real life example on how to trade using options. And some of that is knowing, about the charts a little bit and how to entry based on the system. Now the system don't care about 360 degrees. That's not part of its algorithm. All it cares about is, if it's below, a 3-bar area, and that's just a simple thing, right? So again, it just follows the stops down. Now some had a great move. Meta had a big move, made some good money, but then it topped out, spun short, and it made a great profit so far. We have not got stopped out since we went short on this moon period of February 28th. So again, that was on actually February 24th is where we went short. Again, now with the stops here, so we're going to give a lot back if we do get stopped out, and that's always the concern on a bear markets in the stock market is the quick recovery. Right now, that's what everybody's trained to believe, and even me, I try to get that out of my head. But that quick recovery, dropped 30%. Now again, 33% is pretty important, right? That's 1/3 plus that's 50% looking at the other way. Let me give you an example. I pulled up Meta chart, right, because it's down approximately, it's 35% from high to low. What's the correction so far? Now, if you do it from reverse, and from low to high, and that is 54%, right? So again, 33% is 50% in reverse. Percentages are a little tricky, right, when you're talking the stock market or commodities or anything else. Or because again, down 35%, but really down 50. When you're down 60%, you're down or 60%, you're down 150% the other way, right? So again, it makes a difference percentage-wise. When you're down 70%, I mean, that's like 250%, right? So again, the percentages are a little skewed. Now, a lot of people trade on percentages, so that's why I bring this up. So the down 35% is pretty key to me. 33, is actually the number, right? So anyway, it kind of made a low in that zone. Let me get back off of this. So anyway, yeah, we've got these kind of a reversal period, right? We closed higher in Meta than the previous close. So that's one checkbox for the bull side. But we still did not make a higher high, right? Which again, to have a trend up, you got to have a higher high and higher low. Simple, right? But makes sense. So we have not done that yet. Now we did it here, and now again, since we have a 3-box rule, we did not get stopped out, right? The stops got moved here, 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 and I just moved them here because this is another next box rule. So that's the algorithm part. And we are 45, we're close to the low right there, 35. Again, we got 360 from the low in Meta as well coming up next week. So it's pretty tough for me to just be a bear here. If you didn't participate once it broke trend, it's pretty tough to be a seller down here unless you use options only. Here's Coke. We got chiseled around. We got stopped in, stopped out, which, again, new all-time highs, and then no follow-through, right? Again, what we call a bull trap. So pretty easy trading. Now, we did break the 1-to-1 up, but immediately went back above it and actually closed higher. To me, this is all a neutral pattern. Now, if it's going to be a long-term bull, these are the patterns that you got to have what I call a pause in the market, right? If there's a pause in the market, these are the good ones. It's not a deep correction. It's just a mild correction, and then it start going up again. Now, again, it doesn't have to right away. It could stay sideways. It's already been sideways for 6 quarter moons, so we could go another 6 quarter moons from the other side of it at equal balance. So we might not make a new high until the middle of May, for Christ's sake. So got to be a little cautious. We are 360 degrees over from the low, which was the high, which one of the videos I mentioned that to be a little cautious on your buying that one. I just couldn't buy it. I mentioned it then. Google, again, a Smashville, and we'll look through the daily charts real quick, but you can see that a pretty good hit. This is the low, or this where we got our stop now is the solar eclipse. So again, next week's going to be pretty key on Google and these others that I'm going through, as well as Coke, Meta, and the video that we just looked at. Here's Microsoft, a big outside period, which again, Microsoft was one of the more of the blunt traumas. Again, the highs were made back in December, so it was a little older bear than some of the other ones, so it had more time, and the end results are more of a chipper. Now, we did not go long. Now, if it's bullish Monday, now again, this is Saturday at about 7 in the morning, so on Saturday, April 12th. So again, if we pop high, get witty early off, we're going to probably go long some of these, at least that one for sure. And now here's Amazon. Again, a big day. It did not change the trend short term or long term. Again, Apple's off the screen. So that should be a buy. It's off the screen. Anyway, it definitely, the stops are manageable, right? But again, the stops will be moved. Again, I'm just going to do this one. I did most of them. I want to leave one. I'm going to move it to here because that's your 3-box, right? But it didn't change the stop area. So here's Tesla. Again, one of the drivers down, a bear trap, down 55% or whatever it got to. So the stops are now here. Right, so again, the previous 3-box rule was here. Now it's here. So again, the stops are going to be manageable. Now again, we sold it up here, so that's going to be a good trade, however you slice it. And we did roll that down because it was running out of time on the option. So we have locked in the value, right? Now when you roll something down that's deep in the money, do not put market orders in. Whatever, never should put market orders in. Again, if you got something that's deep in the money, like say $150, which is 15 grand, you want to at least put it in at that, right? And don't worry about the time value, because again, you've burnt through all the time. That's the bonus of the seller. The seller of the option gets that credit regardless, right? But now the option guy gets unlimited profit potential, where the seller of the option can only make whatever he sells it for. So again, when you look through all these old videos, I'm trying to teach you by example on how to use options and a systematic approach. You can use whatever system you like, right? But understanding how I'm doing this and applying the options to it, and actually doing it real live. I mean, when a trade comes out, I try to put it out at least on X right away, as soon as I know it, is kind of important, right? Because you can actually trade this as a system, and it's done real well. So anyway, the stops on Lin are up here. Basically not new highs, but giving up a ton. A big what again? A bear trap on 90 degrees. I did trade some of these on my other program, my bear and bull trap program. Um, Not all of them because I'm limited on money. So I did trade a few though. They were all successful. Anyway, the ED popped a new high. And again, a bull trap there as well. I did actually take that trade, but we got stopped out, and then it went right away up. So that's kind of concerning. But again, that's the nice thing about the options. We know what we can risk. If you did the 100 shares of stocks, you'd be going, dadgummit. So now again, we got plenty of time, so we're not going to lose a bunch. Now here's Adobe, the bears. You just sell it every quarter report. One of these times it's going to gap the other way on the report. But, if it's affected by Doge or something, I got to assume it's got a long ways to go. It's a pretty high freaking stock. But the stops got moved to here, so we're, just locking in a little bit of profit. IBM, stops are way up here. That's locking in a small loss, a manageable loss. And you can see that we, again, closed higher. So we had, out of the three, we got one, the higher close is a positive check mark. Now, again, we made a lower high and a lower low, though. So, again, tomorrow, or next week will be pretty important. Here's BK, Bank of Magellan. Kind of, again, a big off the lows, kind of closed mid-range, but we did close higher. Here's Procter & Gamble, the chopper of choppers. If you've been following me, that's what I kind of thought. Again, we had a bear trap, and the way it went back up, I did trade this one, and you definitely made your money back in about 2 days. Doubled your money in 2 days. Here is JPM. Again, kind of a trap, but again, it had a strong close. Dang, they're halfway back, on one bar. So pretty impressive. A lot of people are going to be kind of confused on some of these markets. Again, just draw a trend line or whatever you're using, and don't try to guess. Be patient, and if the trend goes up, don't buy strength. Whatever you do, don't buy weakness or sell weakness. Excuse me. I think you got to assume that it's going to trade here for a while. Seems to be the mantra. Here's Coinbase. It acted actually kind of weak. We did close higher, but just never got into that big range up. Stops are here. Here's Cintas. Again, the chopper of choppers. Now, again, you got the backstory on Cintas. We made on the pre-market before we started the system on January 6th. It had a 20 grand trade straight up. Right, and then it made 20 grand on the way down on this smash on the actual part of the system. Or no, actually it was opposite. So it made 40 grand on the trade prior to the system start, which was right here, which again, it sold that, right? So it took a loss immediately. But anyway, just so you know, again, logic, right? It just made 40 grand on 2 trades. The probability of it going to trade sideways and rest, which I call a resting period, makes a lot of sense. So I assume these volatile chops, and eventually it'll probably grind higher. Again, it's one of those that are controlled by BlackRock, right? So it's a big contributor to the overall shares of purchase. So now we did close right on the 1-to-1 trend line. So again, the opening basically Monday will be pretty key. Okay, let's look at the daily charts again with all the stuff loaded on there. And you can see we did have some annuals come in on NVIDIA, NVDA, Friday. So we had 2017 low and a high in 2019. So both of those are pretty important zones. And again, these X's are the highs, which you can see here. We have 2 of them that I posted, 7th and the 21st. So again, that's these. And then the O is from, or the red circle, whatever it is from this low here. So I can, without having to look, I know it's from that low. It's pretty important. Missed this low by 1 day only, but it was the lowest close. So these are active in the market. Anyway, you can see that we're kind of holding pattern. But we are back to the solar eclipse, So there again, it's pretty timid. Now here's the previous solar, right here. So I don't know why that line was down there, but anyway, you can see we're just kind of trading, and I can see it getting up into this previous solar, which is going to be resistance as well. Of course, you have a pretty important downtrend line going to affect the market. Now again, those areas usually cause places for people to push the market out. You can see right here that we busted it. And basically kind of trading on it for all practical purposes. Let me see. That is not a 1-to-1. Let me just put something close. There's the actual 1-to-1 trend line, 10 cents per day, per market day. So that's a 1-to-1 coming down. Anyway, so it's kind of important, right, that we're above it. But again, the problem with trend lines and swings and that's where the stops are getting hit. These professional traders, these algorithms out there, go after those areas of most importance. So if the overall trend is down, they'll find those places to run stops, like right here, and then it could continue lower. Or we know that if it's going to go up, it's got to bust stuff, right? Again, that's a correction. If we're going to continue to go down and be at $65 on NVIDIA, then we're going to have some areas where people are getting bulled up and then they, oh crap, I shouldn't have bought it. Boom, get them all spun to hell, and then that adds fuel so they can move their big positions around. So now again, the big boys don't get out too much, and if they do, they're setting it up to buy it again. Very few of BlackRock's trades do they, mess with unless they want to buy it cheaper, right? Because they got control over the market. Here's Meta. We got some zones coming in, off the high 2024 low. Basically missed that low by a day in this previous low. So again, there was some stuff in here to cause this reaction, but again, Meta is just a weak stick. We went up and covered the gap, uncovered close, typical technical stuff, right? So now, again, that's fuel for next week. We can probably pop this out. Again, here's the solar eclipse close, right with the previous solar eclipse close, right? So again, it just fell into resistance. So if it trends down next week, it makes sense a little bit, right? Here's Coke. Again, it's one of the safe trades, but it sure acted, it had it did not have a trap. Oh, it did have a trap, a double trap, I call it. It went up here, popped new all-time highs, plus it took out this one and this one. So again, I actually traded that, and poof, immediately dropped down, right? So maybe it's these fundamentals or whatever, we're into a fundamental price that keeps these guys from just buying more, right? Because it's overpriced. I don't know, something. I don't know what the dividends are. I don't even know what the fundamentals are. I'm not a fundamental guy, but it makes sense that there's a plateau where the fundamentals get overbought on the fundamentals, and the bears come in, or the longs take profit. Either way, it causes new shorts in the market. So, but again, you can see we had this big power down, an outside day up with follow through, and again another day on Friday close. So I'd have a hard time buying new highs, like I've mentioned to you before. Beyond the system here, buy dips in these markets if you got to buy, and if you got to sell. Now that we kind of established some type of lows, you don't sell weakness, right? If once we establish that it can go up, that tells you not to just be bearish at the lows, and to adjust your trading patterns based on that, right? So now Google hasn't proved much yet. It had a low here, 31% down, which we know is 50% back up. So we're got a little zone here. The previous solar eclipse is right here. So and this, basically this is the trading zone that it could fall into. Here is Microsoft. Again, this little blue dot. It was kind of a third high. Anyway, I added it, because again, it's important to the market. You can see it caused several trading activities. This low from the low, which was back here on the 22nd, which was the 4th. So every 4th I'm watching, and you can see it works. I mean, it's a simple trading deal. This actually could be brought down here, but again, once it violates some of those areas, it's pretty key. So really not much in the market from here. 77 market days over from this. From the high, which again, market days to me is like Gann's 45s and 90s and 120s. Anyway, on the Gann wheel, but in market days, right? So anyway, 77 market days was this low. Again, I use that. The next one will be 88. Now let's just quickly, let me run it from this high and see how it did. That was 48. So, and 44 would have been a zone, right, from that high. 44 market days over, really nothing. 55 will be coming up. So anyway, that's the trading Gann stuff that I do. All this is Gann related. I've learned to put it all into one chart. Again, my StockMatrix charts use a square 9 for price, if you look at it, and then the time is the moon. Now, if you don't like the moon, you can trade something fast. Like I don't know, anything you want, right? That's repetitive, that you can go out in time and find, like Venus or Mercury, right? I've got charts that plot that as well, but again, or you can plot them on the chart as well. If you're a flat earther or something, Venus doesn't move much, but in the heliocentric method, the globe method, it's a lot. It's like every 33 days. Here is Amazon. Again, you can see I don't know why these solar eclipses are way the heck up here. What's going on? Amazon's been screwy. But you can see, we hit that solar eclipse. So it fell through it, it popped back, and the solar eclipse close was the resistance. So we haven't really violated anything, so it's up to next week to tell the tale. The next moon period is the 21st, which will be your next zone, which happens to be a Monday. Now it comes in at 1 in the morning. Do you take it from Friday? I don't know. It's always a tricky thing. But again, you can see that the moon periods have kind of been over the weekends, which added fuel to these Friday, Monday openings, closes and openings. So it's going to be kind of important to me when it gets out of the weekend, because then it gets in the middle of the week. Monday, still in that weekend mode, in my opinion. But it all depends on what it wants to do. And as we get into Tuesday and Wednesday, when the moon periods start, then that becomes a little different than a weekly chart, right? So I like that. I like something different. I don't like the mainstream. Again, Apple dropped 35%. Weird gas gaps, definitely fuel the fire to objectives, right, for the market to go up. Really it's sideways. I have a hard time saying a 35% break sideways, but it's just proven that it just doesn't. It doesn't ever follow through. My concern with the Majic Money Machines that they found was that they were, they print money. Where does the money go? Well, it goes. You got to clean it, right? You go to the stock market, and the stock, because every dip in the stock market in history, even back in 1988, it dropped 50% out of nowhere, and miraculously, somebody came in and bought it. Every time. Now I'm from the commodity world. I mean, it'll drop 70, 80%. It'll just stay down for 5, 7, 8 years. Stock market doesn't do that. I always found that fascinating. So again, I always called it the secret seven. Came in and bought it. Miraculously supported the market. From a disaster. There's been a few companies that went toast over time. The Dow Jones only has a few stocks, and it's been in and out. Companies go toast all the time. And then again, the Dow Jones and the Nasdaq and the S&P is an average, right? So they get rid of the crap and keep the good stuff. So pretty interesting how all that works. But here's Tesla. You can see we're just kind of banging around. And what do we have? A bear trap, right? So a perfect little buying opportunity. 60, 55, 56% down. Let me just double check. I think that's what it was. It was 56% down on the button. So a bear trap. I'd have a hard time selling it here. Now, if it made another new low, that wouldn't concern me too much either. Now, of course, I like controversy, right? That, to me, that's trading ability. A lot of people like Elon. A lot of people don't, right? That's cool. That's what I like to see. A lot of people don't like Trump. A lot of people like Trump. I like that controversy because it's a trading affair, right? You get more wrinkles. You get some of these drops that you wouldn't get normally. Lynn, it also had a bear trap. Again, I tried to trade a lot of these. I just don't have the money to trade them all because they all came in at the same time. So I only took a few. But there's 66 market days over from the low, which comes in Monday. So that's pretty important to me on how everything trades. Again, going to be pretty key next week. It's either going to be a continuation to the downside and the bear market resumes, and this was a pause in the market, or we made a low and the climb back up is now in place. Here's ED, 66 market days over is on the 6th, 17th. So you can see that we had some activity here. One of them that just made a new high, and then immediately poof. So to me, that tells me not to buy new highs anymore. Even here it made a new high, poof, made a new high, poof. So, the trend is going to, not doesn't mean that it won't track higher and continue doing that. But, if you're trading, that gives you some fuel. Let's say you never sell a market and you want to buy it. These are the markets that you do it on. It makes a new high, poof. You finally get a break. You find something that it's violating, right? It has to violate. Again, I'm giving you a quick lesson on trading, but here's a trend line. It broke that, right? That's fuel the fire. Oh, people think it's over. A 2-day down. You buy the break. You maybe turn on a 130-minute chart or faster. Here's a 130-minute chart, right? So we're waiting to buy the break. And here is the trade we're just looking at, and then you don't buy the damn thing though until it breaks to the other side. Like we had 2, 3 periods. Maybe you wait till here, right? And then you buy it here, or a higher close. You maybe get it, but you can't do anything until it breaks this downtrend line, right? That keeps you from having an extended move. At least you got an opportunity. Something got violated, and the reward was a quick trade to the upside. Made a new high though. You were concerned, again, even on a 130-minute chart, that that the odds are it's going to break. So you look for some place where it's breaking trend. This gap up was probably a good sign that I would have probably been out here or have my stops here and, traded out of this profitable trade. Again, since we're in new highs, waiting for that break to occur. Once the break occurs, you draw in a simple trend line, waiting for it to break. And, there it was right in here. Maybe you didn't buy it till here, right? If you're buying the actual shares or options, right? Now, I would have been buying options on this break. I'm an option guy more than a futures guy or share guy. But anyway, you can see how knowing the pattern is important, right? You got to know your market. These all-time highs are tradable. I have a hard time staying with something for, like Apple, right? Oh, Apple, if you'd have just done it, But you got to remember, Apple had three 70% breaks, and I believe like 5 50% breaks over its time. So it's not that simple, right? Anyway, I'll digress. I'll move on. And for what I know, I'd be kicking my ass if I made $1 million and gave up 500,000 just because in a long-term trend, wasn't getting out. That'd be insane. Anyway, here's Adobe down 48% off its highs. So again, 50%, close enough. It's getting down there where it's attracting some people to maybe step in and buy it. But the quarter reports have all been bearish. They don't know how to. They don't have an AI, right? They don't know how to like forecast their quarterly numbers. It's just the stupidest thing ever this day and age. I'm sorry. There should never be gaps like this on IBM in this day and age. Here's another gap. They don't employ their own AI. I mean, IBM's got their own AI for Christ's sakes. I'd fire that AI. Get a new one. Get a woman AI. Something. Anyway, but we haven't got back to the solar eclipse here yet on IBM. Again, this gap up just didn't look right to me. Back beyond the old highs. So I guess this, again, new highs, a little different than some of the other ones we just looked at. But this longer term, it could be a high. Right? We have 3 in place. I like the sets of 3 highs, 3 lows, 3 swings, 3 gaps. Here's BK, Bank of Magellan, New York Bank, old company. Again, it's supposed to be a safe play, but obviously something happened. It got set up, and what do we have? A bull trap high, right? Pretty nice one. Shitty close, and even if you waited, but the options were definitely worthy on that one. I actually took that trade. Here is Procter & Gamble. Again, it's supposed to be another safe play, but man, what a chopper. I mean, look at that. I mean, that's a trade. And I said back, I said don't buy new highs, don't buy new or sell new lows. This is a trading chopper. It's telling you the trend, right? The trend is to buy new lows, sell new highs. Just how it is. Now, I don't know why, right? I don't know anything about the fundamentals, but apparently it's somewhere in the middle here is probably your equilibrium of where it should be priced, right? This is overpriced, this is underpriced, right? So somewhere in the middle is where the things should be priced. Here's JP Morgan. We did not get back to the solar eclipse, but it dropped pretty good, fast. Bull of bulls, and then bear of bears. Meta was the same way. Bull of bulls, bear of bear. So again, that was almost too quick. The tendency on these, and again, 33 over was the low, so pretty key to me as well. But the tendency on these is to grind higher and slowly grind higher, and in a year from now, we'll make a new high. So I wouldn't get too excited about buying strength on any of these markets, by the way. Coinbase, same way. Dropped 60%. Now, again, why is 60% important? Do the reverse. 60% is, well, almost 150%. And I guess I got to go down a little bit. There's 150, right? Again thing. 150%. So, which would be 60% down is 150 the other way. So again, that's why it's kind of key to know that. No, again, because it's down 60%, but if I'd say it's down 150%, well, which is impossible. But well, unless you're crude oil, get negative. So again, it's definitely something you got to be aware of. 60% is a big break. 150 up is a big move too. So it equaled it out. It's back to solar eclipse. We're sideways. If it's going to be a long-term trend to the downside, we'll probably have to have a period of rest, right? So all these markets, we'll have to have some chop to coil or pennant or maybe a little ABC correction right in here to get fuel for the next leg down. And then you can measure that next leg down pretty simply. Let's say we make a high. This is our high back. I'm just guessing. What was the high here? The 5th. So let's go May 5th. It'll probably be right about in here. That'll be your leg up, right? And this will be your measurement to the downside, which is down here in September low at 100% correction. But anyway, it'll be at $12. So again, you got to be a little careful on how this thing. People all that possible. Well, it just was there, pre-COVID and post-COVID, so it can definitely trade there. Here's Cintas, the fire extinguisher and laundry company. That's like massive, but again, it's a big favorite of BlackRock. Hence, look how it trades. Bull, new highs, boom, new highs, boom, new highs, and then it didn't make a new high for a year and a half. That was its correction, more of a time break, and then new highs. Grind. New highs, boom, grind. New highs, grind. New highs, grind. So again, it isn't like some of these that makes new highs that just go up and have a massive correction. It's more of a time break, right? So again, that's knowing your market. Cintas is one of those that when it makes a new high, it has a time break more than a price break. It takes a month, where some of these other ones are 3-4 days is all. So now we had a bull trap here, which was right, when they were doing the stock split, for Christ's sake. Stock splits never go down. Poof, 25, 22%, 21% later. It's sucked in the public. And then, broke trend, did everything. If you're a swing trader, you've been bearish, Cintas. Okay, I am done. I'm going to ramble no more. Be careful. I don't know what the weekend's in store. We know now that the markets are having trouble breaking. So we know that it can go up, and we know it can go down. Hence the trading mantra, right? I think you got to assume that it can do any direction at once. It's news trading, which isn't fundamentals, right? It's trading on Doge. We've always had, when Trump's tariff. I mean, we've always had tariffs. The amounts are just a little different. So again, it's all news. They're trying to create news stories out of nothing, but they like this volatility. I'm telling you, I do. I like volatility. So um, I'm not quite trading like the system. I'm not a purist there because again, I know that the bear markets break fast, and the bull markets tend to recover quick. We know that but my system doesn't have that built in. It should be trading 130-minute chart. It should have changed. Again, if I knew I was smart enough to create my own algorithm, an actual algorithm, I would have it so when it gets more volatile, when the volatility increases, the speed of the chart increases. Go from a daily to an hourly, or again 2-hour chart or something, right? Something a little quicker, because in that way it makes more sense on the history of the stock market. Now, if again we're in a true bear market and the highs of the year are in, we're going to have some ups and downs in here and this little sideways area, maybe till mid-May, and then all of a sudden it's just going to continue. Then it's going to roll over and die, and we're going to have the next leg down. This is if that first drive down that we just seen was leg 1, then we are in either a leg 2 up right here, or if it's an ABC, right, we're in that B leg. Again, the Elliott wave I hate, but it makes sense when you look at it and trying to, on a simplistic scale, I can't trade Elliott wave, but it makes sense, right? You got this is either a B leg or a leg 2. So to me, you got to be awfully cautious. Now again, if it's just a grind higher, and again, if you break it down into an hourly chart, you might see waves that you don't see on a daily, right? Because there's been some movement. Sometimes it's been quite active. All right, I'm done. You guys have a good weekend, and be careful next week.